Hi, welcome back to our channel and podcast. My name is Gemma, and here at WIS, we talk all things money, mortgages, and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It means you won't miss out on any of our videos, and it also really helps with our YouTube algorithm. Hi, on today's show, let's talk about mortgages and money. I'd like to introduce my co-host. He really is the brains of the operation. Not only is he a trained accountant and mortgage advisor who has been in the industry for more than 10 years, he is also one of the founding directors of WIS Group. So it's an absolute pleasure to have him on the show. Iftikhar, thank you so much for joining us today.
Chima, it's lovely to be here.
Ifti, now I'm sure everyone is wondering, have you set yourself a New Year's resolution yet?
Oh, definitely. I always have a resolution because obviously we run a business, so we always have plans at the beginning of the year. So likewise, everybody should have personal goals as well. Of course, you have things like losing weight and things like that. But I think everybody needs to have financial goals as well. And one of them should be something like paying off your mortgage early for sure.
That's such a good idea. I think a lot of people focus on initially just getting the lowest monthly quote that they can for their mortgage, and they don't actually think about how can I actually pay this off before the 25 years or 30-year term. I think because of what happened in 2020 and COVID, people are looking for ways to minimize their outgoings and debt moving forwards. So if they were going to do that, say they wanted to pay off their mortgage a lot sooner, we're going to be giving them 15 ways in which they can consider to do this. So the first one we have today is pay your mortgage in advance and not in arrears. So talk us through this. Like, what does this actually mean?
Okay, so some banks give you option to pay your mortgage in advance and not in arrears. So that means you pay your mortgage at the beginning of the month, right? So because otherwise what happens is the interest gets accrued and you settle your mortgage at the end of the month. So which means you're paying interest unnecessarily. So if you do that, it'll help you save some money. Obviously, it helps you in the long run because the objective here is to have strategies to settle your mortgage faster. And this is one of those things. These are little things that you can do, but it really adds up in the end.
Yeah, I must admit, I'm sure I personally hadn't even thought about that. So basically you get your salary, day one, you pay yourself and you pay off your mortgage. And so don't hold on to that cash until the end of the month, right?
No. Yes, that's right. Yeah.
Okay, thank you. And then tip number 2, avoid capital raising, further advances, second loan charges. So talk us through this. What does this actually mean?
Well, capital raising is sometimes a bad habit that people have. They come to me and they say, look, I need to buy a car. Can I raise some money? Or they say, look, I need to get married and I want some money. So they ask for extra funds from the bank, right? Now, it's not a good habit because what happens is if you raise capital, it only adds up to your mortgage. So your mortgage gets bigger. So if you, let's say, borrow £10,000 or £15,000 more, you got 15,000 to pay over a period of time, right? So a longer period of time. So interest gets accrued as well. So it's not a good habit. If you plan to pay the mortgage, see whether there are other means, because quite often I find that people do have savings, but since they are doing a remortgage, they want to raise the money. So it's not a good habit to have. So avoid it as much as you can because that will only delay you paying off your mortgage.
So basically, if you do have money saved, try and use that first before you do a second charge or raising capital.
Yeah, that's right. As much as possible, yes.
And number 3, cut back on expenditure. Now, I feel like I'm guilty of this one because I feel like it's something that everybody says, like, I need to cut back. And then they're like, oh, but I really want that dress, or actually, I really want this new car. But how can we do this? How can it help me cut back on my expenditure, Ifti?
Yeah, it's always tempting, right? Because you always think, oh, I want to spend that £50 more. Yeah, you can do, but have a budget for yourself, right? So for example, you have a £300 budget as entertainment for a month, right? So stick to that. If there is something extra, you can always carry it forward to the next month, but stick to that. That's quite important. There are a lot of apps out there which you can use. Some of the challenger banks offer this as default as a part of the process itself. But otherwise, you can subscribe for some of these apps. So you can use these apps to monitor your expenses. So you set up a budget for say 300 for entertainment and 200 for clothes or whatever it is, and stick to that. And you can set alarms with these apps as well. So if you reach a target of, let's say, if your budget is 200 and you are at 150, it'll warn you, look, you got only 50 pounds more to go. So you have to be very careful. So if you can stick to that, that'll help. But also go through your bank statements. This is something I do every year at the beginning of the year. Because there are a lot of expenses that go through which you think, hold on a second, I've not looked at this before, and I might be duplicating certain things, right? A lot of people pay for Sky Movies and Now TV and Amazon Prime and Netflix, right? So do you really want to pay for people, right? Because it kind of does the same thing, isn't it, right? So, and look at things like your utility bills, it'll help you.
Yeah, that's a good point, actually. I think I had at one point all of them. I had Now TV, what was it, Netflix, something at BritBox, and I actually realized, hey, I don't need all three of these. I can just maybe choose one and cut back on the rest.
Yeah, exactly.
Something that I notice as well is when I'm doing these, my expenditure reports, I need to be realistic with myself. If I set myself a budget, it can't be too scarce. It has to be something that is realistic. Otherwise, I feel like that you're more likely to kind of give up on it.
Yeah, that's right. Yeah, it has to be realistic. Sometimes it takes a little bit of trial and error as well. But, just one point, because 2020, people have saved a lot of money in terms of expenses, right? So, we might see that at the beginning of 2021 as well, because traveling has gone down, entertainment has gone down, some of the childcare also has gone down. So, try to utilize that money to pay off your mortgage, because that can be an opportunity for you.
Yeah, that's a good idea, actually. Because even if it's a little bit every month, at the end of the month or year, sorry, it can actually accrue to quite a lot of money, can't it?
It does, yeah. It can make a difference.
Our point number 4, overpay each month. What does this mean?
Okay, so the banks give you an option to pay generally up to 10% of your mortgage. Because if you agree to pay, say, £1,000 a month, they will allow you to pay extra 10% every month. So therefore, it's always best to make use of that, right? So if you think you can stretch up to 1,200, whereas you're paying 1,000, why don't you pay that 200? Because it'll help you settle your mortgage faster. So it's always a good thing if you can get into that habit. I have clients who do that, on a regular basis. So the whole idea is to cut down the mortgage as you go, at least the number of years.
Sure, and I guess it's easier to pay £200 a month if you have it, rather than waiting until the end of the year, where it feels like a lot more
that's right.
if you just pay 10% off in one go.
Yes, that's right, yeah.
Okay, and number 5, avoid paying broker fees. Now, a lot of people charge broker fees. So how would you go about finding someone that doesn't charge fees?
Of course, I think that should be the first question you need to ask when you talk to a broker, whether it's, they provide a free service. A lot of brokers offer free services anyway. But of course, there are brokers who charge fees. I can understand reasons why they want to do that. But from your point of view, let's say, broker fees, let's say £500 each time you remortgage. And even if you go for 5-year deals, it's £2,500 that you're going to pay at the end of the term if it's a 25-year mortgage, right? So that £2,500, you can easily use it to settle your mortgage. So why do you want to pay broker fees when there's options? Because there are very good brokers out there who don't charge fees. So, why do you want to pay extra and go to a broker when, you can get it for free?
That's very true. I actually know a company that don't charge fees. Number 6, reduce the term each time you remortgage by a year at least. Okay, so I guess this kind of says what it does on the tin, right? So every time you remortgage, try and cut down the time by a year.
Exactly. I've got a client, a lady, who have done 3 remortgages now. Each time she comes to me, she said, "Look, I've got to reduce 1 year, right?" So she started with 30 years, and at the end of the 2 year term, it was 28. So she said, "Look, I don't want a 28 year mortgage. I want a 27 year mortgage." So the next time she came, she only had 25 years left, and she said, "I want 24." That helps you because all what she's doing is, because she's in her career, she's sort of progressed as well. So
Right.
she's earning that additional money. But eventually, what will happen is you'll cut down easily about 10 years if you go at that pace, right? And if you're looking at a 30-year mortgage. So, but that's brilliant, isn't it? Because if you're planning to go on with the mortgage for up to 70 years of age, you'll finish off at 60,
Yeah.
right? So it'll be like mortgage free at 60.
Yeah, that's such a good point. I don't think people realize that, as you go through your job, you progress in your career, you do, well, you'd like to hope that you'd get a pay rise or a bonus or something, and actually using that money each year to kind of cut back and maybe pay a little bit extra on top of your mortgage to pay it off sooner is actually a really good way to cut back and reduce the time.
Yeah.
Because that interest does add up, doesn't it?
Yeah, it does definitely. So this, I mean, you don't feel it because if you're reducing 1 year, the monthly payments generally don't go up a lot, right? So you don't feel it, especially if you're starting to earn more money. It's always a good option.
Number 7, we've got pay fees up front. Talk us through this. What does this mean?
Yeah, so banks give you an option to either add the fees to the loan or they give you the option to pay it upfront, right? So what happens is, let's say you take a mortgage product which has a 999 product fees. So if you add it to the loan, what happens is, interest gets accrued. And let's say you did 10 remortgages in the term. So £10,000 has already been added to your mortgage, right? So if you have the option to pay it upfront because it does add up otherwise.
Okay, thank you. And 8, use an offset account. What does this mean?
Yeah, that's a sort of a beautiful mortgage for people who have spare cash, right? I'll just take an example. I've got a client who came to me the other day and said, "Look, I want a 200,000 mortgage." I was like, "Okay, fine." But then I looked at his savings and he had 50,000.
Oh.
So I asked him, "What is this 50,000?" And he goes, "This is my rainy day money, right?" So I asked, "Is the bank paying you any interest for that?" He said, "Nah, next to nothing." So I was like, "Okay, so why don't you connect the two and have an offset mortgage?" So what the offset mortgage does is they only charge you interest. In this example, they will only charge you interest on 150,000. So on the balance 50,000,
Yeah.
yes, you will accrue interest, but you can use that money that you accrue to pay off your mortgage. So automatically your mortgage balance keeps coming down, right? So it's a fantastic tool if you can use it. But people who benefit from it is people who have spare cash, right? So if you do have spare cash, this might be an option for you to reduce your mortgage and pay the mortgage off faster.
Does it only, or is it only good for people that have a large amount of savings? Like, would it work for, say, £5,000 or £10,000?
It will, so long as the interest rates are low. But I think we got quite a few competitive banks who are now offering offset mortgages. Those rates aren't too different from most of the other lenders. So if that's the case, you will benefit. But there are calculators that you can use. Generally, brokers have access to these calculators. So I'd suggest you speak to a broker and they will be able to work it out to see whether it's worth you doing that. Because all this is about calculations and the objective is to settle your mortgage faster.
Yeah. Okay, thanks. And number 9, use your bonuses wisely.
Yep. Yeah. I mean, the way I look at it is bonus is something, which you didn't expect, right? So, you didn't expect it, you get the money, why don't you pay that off, right? So, for example, even if somebody gets, say, £2,000 bonus a year, and let's say they have a 25-year mortgage, just add 25 into 2,000, it's £50,000, right? Your mortgage is paid off, 50,000 paid off. Now, that's a lot of money, right? So I think you probably want to plan wisely so that you pay it off. So that's a good option that you can use. I see a lot of clients using this. And obviously, like I said before, you got a 10% allowance that the banks allow you to pay anyway, right? So you might as well make use of the bonus, because the way I look at it, it's something that I didn't expect, and it's something that came my way. So I might as well make best use of it.
Yeah, that's a good point. I feel like a lot of these things are things that kind of apply to everybody. It's just we don't think about them, you know.
Yeah, that's right. Yeah.
It would never have crossed my mind to, pay off my mortgage with a bonus, but it's just such a good point. And number 10, we've got align your repayments with your income.
Yeah.
So
Yeah, I mean, I think that's quite close to bonuses.
okay.
People get pay rises, right? So, for example, let's say somebody got a 5% pay rise. Why don't you overpay your mortgage by 5% at least, right? So, because that's aligning your, income aligned with your mortgage, right? So, if you do that, what happens is it'll pay off your mortgage faster, because you're used to a lifestyle of, let's say, somebody's earning, for example, £10,000 per annum. So, you're used to that £10,000 lifestyle, and suddenly a 5% rise is £10,500, right? So now that is something that you are not really used to. So why don't you make use of that? At least use, the percentage of pay rise to pay off your mortgage, and that will help you settle it faster.
Definitely. That's a really good point. I think a lot of these things are things that people that just don't think about, aligning your repayments with your income, any paying off your mortgage early, using your bonuses wisely. It's all really good stuff that people can do despite their financial situation.
Yeah, that's right.
Point number 11, don't reduce the monthly repayment if the interest rate falls.
Yes.
What does that mean?
Yeah, I mean, obviously, if the interest rate drops, for example, let's say you're paying £1,000 a month, right? And let's say you're on a 2% interest rate now. And if the new interest rate is, say, 1.5%, and your monthly installment will come down, let's say it's 900 for argument's sake, you're used to paying £1,000. So why don't you continue to pay £1,000? Because automatically it will reduce your mortgage, because you're used to paying £1,000. You're not doing anything extraordinary.
Right.
So all those little things add up in the end, right? And it will only reduce the term, right? So that's quite important.
Okay, yeah, okay. And number 12, use mortgage tracking tools. Does this mean, once you've already got your mortgage or before you get the mortgage? Like, when should you use these tools?
I think the mortgage tracking tool is after you get the mortgage.
Okay.
So what a mortgage tracking tool does is, brokers should have access to this. They will track whether you're on the best deal at all times. So for example, let's say you took a 5-year deal, and let's say the interest rate was, say, 2.5%, right? The mortgage tracking tool will check to see whether, if the interest rates drop to 2%, whether you will benefit from that. So if you benefit from that, the brokers will generally come back to you and suggest, look, looks like you have a better deal out there, right? Even if you pay a penalty and break the mortgage, you will benefit from that. So it's always good to have one of those mortgage tracking tools, because it'll only work in your favor. So try to see whether you get access to one of those tools. Generally, brokers have access to this.
So basically, even if you're on a fixed rate mortgage, just check with your mortgage broker if you might be able to get a cheaper deal somewhere else.
Yeah, that's right. I mean, call for an annual review with the broker, because that's something that we as brokers offer. But that will help you, right? So so it's always good to do this exercise at the beginning of the year. Look at your expenses, talk to your broker. Talk to your broker about your financial sort of targets and your financial objectives, and what your future plans are, because they will be able to assist you with devising a plan for the years to come.
Yeah.
Right? So make best use of that.
Yeah, it's a really good idea, because I think a lot of people, they get their 2-year or their 5-year, and then they kind of think like, oh, that's it for 5 years. I don't have to think about it. But actually, we're saying to people, no, do think about it. Do get a yearly review, just to make sure that there isn't a much cheaper option available to you that you could move over to.
Yes, that's right.
Okay. And number
Definitely.
13, Request an annual review with your broker. Okay, so this kind of ties in
Yeah, I
with
think
that.
I covered part of that. Yeah. So annual review is quite important because, it looks at your targets and it looks at what you plan to achieve. Because there can be changes, right? People, they have kids, they probably want to move to better areas where there's better schools. Objectives can change as you go.
Yeah.
So it's always best to sit down and plan, because you can also plan your next year's, if your mortgage is due in a year's time, you can always plan that as well. So it's always helpful if you can do that, right? So a request for a broker review. I mean, we do that, and I know a lot of other brokers do it as well. So I think it's a good practice to have.
Yeah, definitely. I like that one. Number 14, move funds from a cheaper mortgage to the more expensive mortgages.
Yeah,
do
so
that?
that's something that you can look at. So, for example, I've got clients who say, okay, I've got one mortgage at 2.5% and the other mortgage at 1.5%. This often happens if you have two buy-to-let properties, right? So you got to see what's the equilibrium, right? What's the point at which it's worth, right? So it might be sometimes worth bringing the 2.5% mortgage down to 2%. And maybe pay a little bit more on the 1.5%. It might still work out better for you, right?
Okay.
So you got to always look at those combinations. Generally, mortgage brokers will have tools to check this to see what is the best possible combination of the deal, right? So you got to look at combinations at times.
Okay, so this kind of point is more for people that have more than one property, right?
Yes, that's right. It's for people who have more than one property.
Okay, cool. And number 15, don't get an interest-only mortgage.
Oh, yes. That could be a little dangerous, right? I mean, to be honest, there aren't too many interest-only mortgages around now, but provided you meet certain sort of conditions or criteria, you can still take an interest-only mortgage. Quite often people come to me and say, look, I need an interest-only mortgage. My first question to them is, why? Right? Because that's the most important thing. Why do you need an interest-only mortgage? So, if somebody can pay £500 interest, quite often they can pay a little bit more. So at least pay a little bit more capital off, because that will only settle your mortgage faster. Because the problem is, you don't know what will happen in future, because you don't want to be leaving it too late, right? And realize that, oh, I'm going to be short, right? So if you are going to be short, very likely you may have to sell the property when it comes to retirement age, right? Because you're going to be short, because the bank will want the money, right? So therefore, it's always good if you can avoid an interest-only mortgage.
So do you find that most people think that they need an interest-only mortgage because it's a lower rate? Is that what you're saying?
It's mainly cash flow, because people say, okay, if I do a repayment, it's £1,000, and if I do interest only, it's £500, right? It's good on my purse, right? That's what a lot of people think. But I can understand why some people want it, because there are clients who I work with. They get low pay during the year, and suddenly they get a spike and bonus, right? So for people like that, it's an option to look at. But like I said, interest only is not very popular at the moment because of there has been some past history around interest only mortgages. But banks do offer interest only mortgage if you sort of satisfy certain criteria.
Okay, thank you, Ifti. Thank you for those great recommendations. I just feel like I should put a reminder out there to everyone that these points may or may not be applicable to all borrowers, and please do talk to an advisor if you're unsure about whether these suggestions are suitable for you. And if you don't have a broker, I will leave our WIS contact details below, as we are always happy to help. And a little reminder as well that a mortgage is secured against your home, and it could be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We will be back next week. Thanks, Ifti, with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.
Thank you very much.